Hello, everyone, and welcome to today's edition. I don't know how many of you follow me on Twitter. My handle's at OptionizersSS. But I posted last night that Fridays have not been good to me. Um, I think it's due to Theta mainly because I play current day's expirations. Um, I don't know. I might have to start looking at playing the following week's expirations on Fridays. I don't know. Something that I'm trying to work on or trying to figure out. But today wasn't a good day. 3 trades, 1 winner, 2 losers. You see here, Nvidia 35% winner, Boeing 41% loser, Apple 45% loser. If you look across the board, there's just a lot of consolidation. I'm looking up at my charts right now. I got in Boeing. It had a little pop this morning, actually a nice pop this morning right at the open, and then that sold off, and then it just went flat for an hour. And that's when I got in. I got in right after that sell-off, thinking it was going to pop back up, and sat there for an hour. Theta just killed me. It's a slow, very slow grind up, but it's moving slow enough that theta is greater than the premium increase. So I think that's one of the things that I run into on Fridays. My first trade today was Nvidia. I bought Nvidia 932. Pull the chart up. You see right here, I bought it at 932. Paid 76 cents. 76 was pretty close to. I think my bid was actually at 78. So it's a slight slippage on the fill, but not enough to really be concerned about. But I got in Nvidia puts at 932, which was just before the close of this candle, so probably right around in this area here. I got in. This candle closed at 933, so almost the close of this candle. The close of this candle was right here, so I probably got in right about this area. 76 cents. I sold at 935 3 minutes later, so just before the close of this candle I sold one contract at 103 and another one a minute later at 104. So my you see my net on that was 35%, or not net, that was my gross, no fees taken out of there, so 35% on Nvidia. Next up I bought let me shrink this down so you can see better. Boeing. I bought Boeing calls at 941, and I was actually up a little bit on those when I first bought them, but not really enough. I bought at 941, so I bought right at the close of this candle, about here. I paid. Here's another one of those slippage things. My bid was $1.32. It filled at $1.15. So my spreadsheet is based off $1.32. But Thinkorswim paper trade filled me at $1.15. So let's go back to the chart. 132 I got, or 132, 941 I got filled. So just before the close of this candle, I bought because we had a pivot point here and we had the bottom of the cloud, and I thought that it was going to bounce and run higher. We didn't get the kind of bounces I was looking for, but it's what I was looking for. So I bought Boeing at $1.15 or $1.32. Let's take a look at the options chart. 380 calls. So you see the 380 calls. I bought, they went up to $1.32, which was my entry. That's all the higher they went. Now over here they made it to $1.39. I had my first sell order set for 143. That didn't get filled. Come back and look at my canceled orders. 143. I had a sell order set for 143 on the first contract at 954. 954 was right here. That's when I canceled it. I had it set way back here, probably in here. It didn't quite get filled, so I canceled it here, figuring I was gonna have to bail. I might have to bail. So here's the options chart, but here's what I was looking at. I ended up stopping out at 1041. Right before the close of this candle, it was still going up. I mean, it wasn't really losing. It wasn't really losing its footing, but theta was killing me. I'd held this thing for I held it for an hour, exactly an hour, and theta was just killing me on it. So I just had to bail. I mean, even right now, it's still, even at this pop here, it only went to 114, and my entry is 132. If it would have happened to have dropped right here, I would have been down to, down 80% on it. So I bailed on it. The theta just tore me up on this one. Not to mention it wasn't the best entry either. There's just too much chop here. Just too much consolidation. Just no movement. Sure, if you get in down here at the bottom of this, you could sell it here and probably get a good 15-20% pop on a Friday, but you have to play it just perfect. I played Apple also, traded Apple. I got in at 9.45 for $1.28, and that was a legitimate fill. That was about right. What did I say? It was 9.45. Yeah, 9.45 at $1.28. So I got in at right at the close of this candle. What I was looking at here was we had a pivot point here. We had a nice bounce from the opening sell-off. Opening, I wouldn't call it a sell-off, but a little bit of a dip at the open. Came up, nice big green candle. We popped up above this pivot point. I thought we may pull back to about here, but I entered anyway just in case. I thought we'd come down to here and then bounce higher, and that didn't happen. So I pretty much bought at the highs on this one. I paid $1.28. I stopped out at 70 cents at 10:05. So 20 minutes later, I stopped out right before the close of this candle. So yeah, not a good day for me. Another Friday that beat me up. You see here, I'm down $285 today. And this is typical of the way Friday's been going for me. I'll be up, $100, $150 for the week, and then Friday comes and I lose $200 or $300. So, yeah, I could just say, well, I'm just not going to trade on Fridays, but I want to figure this out. I want to figure out what I'm doing wrong, what I need to do differently. So, yeah, once I figure it out, I'll be fine. But that's one reason why you paper trade, to see what strategies, what works and what doesn't. And right now, the strategy that I use Monday through Thursday just doesn't work on Fridays. So, need to look at something different. Now, some stocks, some charts took off today and ran really good. Netflix ran like crazy this morning. In fact, it's not really running right now, but it's holding its highs. And this was actually called out in the ramped up trading room. Rock called this out. They jumped in, but you know I'm trying not to follow anybody, so I didn't want to follow anybody. I pretty much try to ignore what's posted in there, but yeah, this would have been a good entry. Like I said, Rock played this when he called it out and played it, and it was a winner. Really, other than that, Apple would have been a good short after that. You know, half hour after the open, right in here would have been a good short here. That would have worked out. Roku. Roku kind of chopped right here, and then you got a nice pop here. That would have been a good trade. You could have entered off the 921 cross. You wouldn't have caught most of the move, but you would have caught some of it. You probably could have got 20% there. So yeah, anyway, like I said, not a good day. Fridays have not been good to me, but I'm working on that, and hopefully I've figured out. Maybe I'll have to start playing, trading the following week's expirations. Maybe I have to start looking for different signals for entries and exits. Maybe candlestick reversal signals rather than patterns. Patterns, a lot of times patterns, by the time a pattern shows itself, the move is, you know, you're already quite a bit into the move, and you know, you're you know, if you look at a wedge break or something, a lot of times it's already up from the lows. So a day like, you know, day when there's chop, so a lot of times that's not going to work for you. If you trade a pattern, let's say right here, bullish engulfing candle, you had a bullish engulfing candle right here off a pivot point, your entry would have been here, your stop would have been a close below. Let me zoom in here. When you trade a pattern like this, now this is, you know, I've done quite a bit of, and I recommend to anybody, read or watch anything you can on Steve Nissen. Steve Nissen is the king of candlesticks. He teaches, when you have a bullish engulfing or bearish engulfing, whichever, but in this case bullish engulfing pattern, your stop, your entry is the next candle, the opening of the next candle. As soon as it pops above the close of the previous candle, that's your entry. Your exit is a close below the lower of the two. So this would be the lower of the two, because the low on this one was 144.85, the low on this one was 144.77. So your stop would be a close below 144.77. Your entry would be right after it breaks the high of this candle, which was 145.37. So once this candle here breaks 145.37, that's your entry. That would have worked great. So maybe I have to start looking at something like that on Friday. Same thing here with Apple. We had a bullish engulfing candle here. The low was here, so your stop would be a close below this level, and your entry would be as soon as this candle breaks above the high of this candle. So you wouldn't have got a lot on this trade, but I bet there would be 10% there. I mean, let's take a look, just for the fun of it. Let's take a look at Apple. It was trading it. No, we probably don't. It's not that big of a move. We can figure it out. Looking at volume. Let's say we traded this one. Okay. So here's the Apple options chart. Let's say we entered at the open of this candle, because the open of this candle is pretty close to the high of this one. So let's just say 1048 we got in. Entry would have been $1.64. Your high rate there was $2. So you got 30 some cents. That's 18%. That's more than 18%. 36 cents on $1.64. 21%. So yeah, you could have got 21% on that pop, just trading this candlestick reversal signal. Like I said, read and watch anything you can on Steve Nissen. My favorites are hammer candles and bullish engulfing candles. Um, they seem to be the most accurate, but you need to learn how to read them. I like to have now. Let me find a hammer candle. I've been in chat rooms where um, the instructor, the mentor, would call this a hammer candle. I've been in a chat room where he's called this a hammer candle, called this a hammer candle. He called this a hammer candle. This is a hammer candle. Everything he called everything. This would be a hammer candle. Everything he called, as long as the bottom tail was longer than the top wick, didn't matter where it was on the chart, he would call this a hammer candle. These are not hammer candles. The strict definition of a hammer candle is the tail has to be at least twice the length of the body, and it has to be at the bottom of a downtrend. And there can't be much of a wick. The wick can be maybe 10% of the body, maybe. This here, the wick's too long. So this Thinkorswim will actually chart this. If you come up here to patterns, select patterns, candlestick, select it there, it'll actually show hammer candles. This is a bearish engulfing, bearish engulfing, bearish. Now bearish engulfing after a doji or bullish engulfing after a doji isn't as accurate. Same here. This is considered a bullish engulfing, but it's almost a doji here. The bigger the previous candle is, the more strength an engulfing candle has. This one here, bearish engulfing, following a big candle. That's a lot more powerful, a lot more accurate. Here's a hammer candle. Hammer. The bottom of a downtrend, the body is at least twice as long as the tail. Let's try to find one during regular hours. Right here. They're highlighted in yellow. Hammer candle. Had a hammer candle near the bottom of the cloud, and look what it did. So that's something to look for. Maybe I need to just start worrying about reversal patterns on Fridays and not worry about, or not reversal patterns, worry about reversal candles and not about reversal, or not about patterns. Another hammer candle. Wasn't a very strong hammer candle. It was red, and it doesn't matter if it's red or green. The candle can be whichever color, red or green, and still a hammer candle. But it's still, it chugged its way up here, but it's still reversed. Not that it was really in much of a downtrend here, but Thinkorswim, I don't know what the criteria is for Thinkorswim to flag a hammer candle, but they're pretty accurate. I do know Steve Nissen, if you do a search for Steve Nissen, I think it's called candlecharts.com. He has a tool that he sells. I don't have it. I don't think I need to buy it because I'm pretty well versed with candle pattern or candlesticks. I've done, I don't know, probably 50, 7,500 hours of candlestick training with Steve Nissen. So, but you can go in and select any candlestick you want to find, and it uses his definitions. It's his tool. He's the one that created it, and it'll flag them. It'll mark them for you, just like this does. This here is called a piercing line. The reason it's called a piercing line, what a piercing line is it's a green candle following a red candle where the open is below the close of the previous candle. The close is at least halfway through the previous candle. That's the definition of a piercing line. If I click on it. Piercing line right here. I leave these at the default settings. Whatever Thinkorswim has, I don't change them. I think you can go in and edit them, but I don't. Piercing line requires a confirmation candle. It's a bullish reversal candle or bullish reversing pattern, but it requires a confirmation candle. The confirmation would be a print above this. Let me do this. We require a print above the high of this candle. We never got a print above the high of this candle. Piercing line is the opposite of dark cloud cover. Dark cloud cover is just the opposite. You have a green candle here with a red candle here. The red candle would open up here and close at least halfway down. And it would also require, now there's two different ways you can look at confirmation. Steve Nissen says confirmation is a print above the high of this green candle. You could say, okay, I want the confirmation above this. It's whatever your risk tolerance is. Up here you probably have a little bit higher percentage of being accurate, but you're have a bigger stop, wider stop. So, but yeah, read up anything you can on Steve Nissen. He's the leading expert in candlesticks in the U.S. He actually went to Japan and studied and had books interpreted. He used to work for several brokerages, but I think he was working for like Merrill Lynch. And there was a lady down the hall from him that was, I think it was Japanese, but she was Asian. And he walked by her office one day and saw she was looking at these candlesticks, these funny looking things here. And he went in and asked her what that was that she was looking at, and she explained it to him. So that's when he started. This was mid 80s. It's when he started learning about them, researching them. And he said when he first started doing it, he had to actually take you take the old style. Let's see. He would take this old style chart and manually draw it out the candlesticks. Now look at this. Look how confusing and hard this is to look at. I'm sure if you've been using these kind of charts for years, you'd probably be used to it. When I look at it, it's all foreign to me. But he would manually convert these to candlesticks. So he went to Japan and read all the books, talked to the experts, everybody he could find about it. And you can change this up here in style, chart type, and there you go. I don't know what candle trend is. I use regular candle. But yeah, he has videos, he has courses, he has all kinds of stuff. But read up on Steve Nissen. These are usually the reversal candles. The patterns, the stops are pretty tight. They're not quite, I don't think they're quite as accurate, but the stops are a lot tighter. See right here, we're showing a bullish engulfing starting to form here. I don't necessarily like the bullish engulfing after only a small 2 candle downtrend. Doesn't mean it won't work. You see we had a bullish engulfing here, and I said an entry would be a print above the high of the bullish engulfing. We didn't get that till way over here. However, if you watch Steve's videos, I think he says that for it to be basically after 3 candles, this bullish engulfing no longer has any effect. You can basically forget about this bullish engulfing after 3 candles. It has to happen within 3 candles or it's done. It's canceled out. So bullish engulfing here. Right here we did get a print, and this is within 3 candles. We got a print above the high of that, and look at the pop. Not to say it will always happen, but and there we lost that bullish engulfing. Let's take a look at Apple. Let's see what we have. And I did some trading just using these candle signals, but right here is bearish engulfing. And I like this one. It's bearish engulfing. It closed below the cloud, below a lot of resistance levels. So your entry would be a print below this level here, which was the low of this candle. Your entry would be here. You had a nice, on a Friday, current day's expirations, this would be a good, probably 25% run. So anyway, this was supposed to be a short video, but I got into talking about candlesticks. So anyway, read up on candlesticks. That's about it. I mean, the more you learn, the more well-rounded you become. So thanks for watching. Hopefully next week, I mean, this week was a good week. I'm not going to complain about this week. I'm up $650 on a $1,000 account, so my account's up 65% this week. Can't complain at all about that. I was up 85% before today, 83%, something like that. But can't complain at all. Anyway, thanks for watching, and see you guys Monday. Bye.